Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Friday the 9th of May in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the US may dramatically cut its China tariffs to less than 60% if talks go well with Beijing this weekend. The
UK agreement is a political win for Keir Starmer, but the economic benefits appear less certain.
Plus, once known just as Bob, a baseball fan from the south side of Chicago, Cardinal Prevost, Francis' protege, becomes the first American pope.
Let's start with a roundup of our top stories.
The Trump administration is considering a significant reduction in tariffs on Chinese goods as part of talks this weekend between the world's two largest economies. Sources tell Bloomberg the White House is weighing a cut in levies to below 60%, with hopes that Beijing will agree to a reciprocal move. US Treasury Secretary Scott Bessent and Chinese Vice Premier Hu Lifeng are meeting in Switzerland tomorrow for the first high-level talks since they imposed triple-digit tariffs last month. Speaking yesterday, President Trump hinted at the prospect of lower levies.
I mean, we're going to see right now, you can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship.
Trump's latest comments come as new data shows that China's exports grew by a greater than expected 8.1% in April. However, shipments to the US slumped by 21% and imports from America fell by almost 14% after the imposition of duties. Meanwhile, exports to the European Union and Southeast Asian countries rose 8 and 21% respectively, in a sign that China may be finding other markets for its goods.
The UK became the first country to sign a trade deal with President Trump since the start of his global trade war. The US hailed the agreement as an historic step towards reshaping its global trade relationships. US Commerce Secretary Howard Lutnick told Bloomberg the deal could serve as a model for future agreements, outlining the kind of concessions that President Trump is seeking in return for tariff relief.
As the president said, many of those will be higher. Of course, you can bring them down by opening your government, opening your economy to U.S. exports. And then the sectoral tariffs, that's where you can be super smart if you're opening your market to us. And that's what the UK did.
Howard Lutnick also conceded that targeted deals with the likes of South Korea and Japan may take much longer to finalise. The Anglo-American agreement grants the US better market access and faster customs clearance for exports to the UK. In return, the UK gets limited tariff relief on autos, steel and aluminium, with many details, though, still to be negotiated.
Britain's success in becoming the first country to secure a trade deal with President Donald Trump since his global tariff offensive is being hailed as a political win for the Prime Minister Keir Starmer. Levies on cars are being reduced from 27.5% down to 10% on a quota of 100,000 vehicles annually. Meanwhile, tariffs on steel and aluminium will drop from 25% to zero. In a call with President Trump, Starmer described the deal as a significant moment.
With this president, this prime minister, we've managed to achieve what many people have tried to achieve for many years. It feels completely historic. Donald, thank you so much. It's really good to have got this deal over the line. Tribute to both teams, tribute to our countries and tribute to your leadership.
Starmer's allies are especially pleased with the White House commitment to provide the UK with preferential treatment in any future sector-specific tariffs. However, Bloomberg Economics estimates the deal will only boost UK GDP by 0.1%, with ongoing global tariffs and uncertainty still expected to drag growth down by 0.2%.
Bloomberg understands that British Airways parent IAG is poised to order roughly 30 Boeing 787 Dreamliner aircraft. US Commerce Secretary Howard Lutnick teased the order yesterday, telling reporters an unnamed British airline would buy $10 billion worth of Boeing planes. He then said that engines from Rolls-Royce and other UK aircraft suppliers won't be subject to US tariffs. Boeing is the largest US exporter of manufactured goods and has been a target for countries retaliating against the White House's trade policies.
As US trade policy continues to dominate the market narrative, the uncertainty is having a surprising upside for the UK housing market. Bloomberg's Ewan Potts has more.
President Trump's trade policy is upending alliances, threatening global growth and causing mayhem for business. But for UK homeowners, it's working out quite well. In the last few weeks, several major high street lenders have cut mortgage deals below 4% for the first time in months, bringing the average down from about 4.5% at the start of the year. Trump's trade war has seen borrowing costs fall on the gilt markets, which has fed through to mortgages. And the Bank of England made clear yesterday that tariffs were a key factor in their base rate cut. In London, I'm Ewan Potts, Bloomberg Radio.
Building on the protected land earmarked to prevent urban sprawl would mark the biggest change in London housing policy since the 1960s and a reversal of Mayor Sadiq Khan's previous opposition to the idea. The changes are set to be announced in a speech today, setting out why the move is necessary to meet the capital's house building targets. A consultation on the plan will be open until late June, with the draft to be published in 2026 and formal adoption expected in 2028.
And lastly, former Cardinal Robert Prevost has been elected Pope, the first North American in history to take up the role. It took the Church's 133 electors just 2 days to identify Pope Francis's successor, who has chosen the name Leo XIV. Speaking to crowds at the Vatican, the new Catholic leader outlined his hopes for the future.
Together, we must try to find out how to be a missionary church, a church that builds bridges, establishes dialogues, that's always open to receive on this piazza with open arms.
Pope Leo XIV speaking there through a translator. He also spoke Spanish during the address in a tribute to the people of Peru, where he served as an archbishop, eventually gaining citizenship. Those are our top stories this morning.
On the markets, we are looking at the dollar holding steady after yesterday's gains. The 10-year Treasury yield is down a basis point this morning at 4.37%. The MSCI Irish Pacific Index 0.5% higher, although some weakness on Chinese share markets ahead of this weekend's trade talks. The CSI 300 Index down by 0.25%. European stock futures pointing higher, up by 0.25%. The S&P 500 yesterday finished 0.6 higher, and futures are pointing 0.1% higher this morning.
Now, in a moment, we'll bring you the latest on what to expect from this weekend's US-China trade talks. Plus, did Keir Starmer get an economic win as well as a political one with yesterday's US trade agreement? We can discuss that. But there is another story that has caught our eye that we've been reading today. The inside story of this year's Bordeaux wine tasting season. Does this appeal to you, Stephen Cowell?
Caroline, why would you assume that on a Friday morning I'd be excited to be reading about wine? This is the en primeur, which is when wine buyers and critics get a first taste of the latest vintage while it's still aging in the barrel. So it's not wine necessarily that you'd want to be drinking, but it does give those in the know a sort of sneak preview as to how this particular vintage, which won't be bottled for another 18 months or so at least, is like. There had been a lot of concern about this particular vintage because last year both the spring and the harvest was cold and rainy, so fears about the quality of what you were going to get out of it. Ian McCoy, writing in Bloomberg's Top Shelf Drinks newsletter, says that the results weren't bad, but there's a lot of concern about prices, not only because it's not necessarily the best year that these Bordeaux wine producers have had, but of course also tariffs, because essentially the buying and selling happens now, but those bottles won't be delivered for years down the line. And that's when, if there are tariffs in place, they could actually drive up the prices. So the pressure on the chateaus to bring down prices, US buyers are pulling back in particular because they're worried about how much they're going to cost down the line as well. So really interesting time for the Bordeaux wine producing region. Yeah,
it does feel like one of those stories that we've been worried about, concerned about, not just climate change, but also, trade for so long. And yet this perhaps is one of those pivotal years. The good news, though, is that Ellen McCoy's also got a list of the most interesting wines for this season.
She says don't pay too much. That's the most important thing. Yeah.
Okay.
Bloomberg.com/newsletters if you want to sign up for Top Shelf.
Now let's bring you more on what to expect from this weekend's trade negotiations then between the US and Chinese delegation. The US Treasury Secretary and the Chinese Vice Premier will be with their delegations in Switzerland for these talks. And our Hong Kong news desk editor Jill Deesis joins us now for more on this. Good morning, Jill. So what have we learned then about the American strategy going into these talks?
Well, from what we know from talking with people familiar with preparations for these talks is that at least least on the U.S. side, they've ultimately set a target of reducing tariffs on China below 60% as sort of a first step. The thinking is that this is something that they feel that China may be prepared to match. I mean, obviously when you've got tariffs in excess of 125, 145%, that's a pretty significant reduction in terms of what these two economies have really been throwing each other on so far. But I wouldn't go so far as to expect anything sort of big and concrete out of this weekend. At least, obviously, when it comes to Trump, you never totally know. But what these talks at least seem like going into this weekend are likely to be more exploratory, more geared toward airing grievances rather than hammering out long-term solutions. I mean, we know a couple of months ago, Bassett was speaking behind closed doors, saying it could take a couple of years for us to reach, total sort of negotiations on trade. But at least in the short term, it does seem like, the U.S. May be coming in with sort of an opening figure there. We'll have to see whether that actually results in anything remotely concrete coming out of this weekend.
So that's what we're hearing from the US side. Do we have any indications from the Chinese side about what they're hoping to achieve, or perhaps where there could be avenues for negotiation from them?
Well, I think on the Chinese side, that's certainly a lot more guarded. I mean, at least what China has said openly is that they've actually made a lot of this about wanting to reduce the tariffs entirely, which, I think fair to say that's probably out of the question. But, China has really framed this as, something where they're looking for more respect from the U.S. in terms of what we could actually see on the table for discussion. I mean, you can just look at some of the major pain points between the U.S. and China recently. China sort of stopping exports of rare earth materials, certainly critical for a lot of infrastructure and technology. That's maybe something that could be discussed. Obviously, on the U.S. side, the fentanyl trade is something that's really close to Trump. Maybe that's something that comes up for discussion. And then I think, there's sort of numerous other avenues that they could really be talking about here. Maybe advanced technologies trade is kind of off the table, but, maybe there's something more in terms of aviation, the aviation sector, maybe some other things that they could really kind of come to the table and discuss. But again, I think really kind of difficult to get a lot of insight from that Chinese side right now.
Okay, interesting. And yet we do get an insight into what's at stake for the Chinese economy. The hard data out for last month when it comes to imports and exports from China.
Yeah, I mean, I think that, it's no surprise, obviously, that when you're effectively, implementing these really, really, really incredibly high tariffs on the world's second largest economy and sort of vice versa. I mean, when you're hampering trade between these two countries, that really, really sort of takes a hit. I mean, right now, I think China had earlier this year set a GDP growth target of about 5% for this year. That's something that they've been, targeting over the past couple of years, particularly as this really massive economy growth starts to slow a little bit. I mean, our consensus economic forecast right now on the terminal is 4.2% growth. So obviously quite a ways off from that GDP target. So we're talking about tariffs that really, really, really impact economic growth in China. I think you're really seeing that right now, with factories in China, and when the economy, when the government is trying to push more domestic consumers within China to spend more to sort of make up for this. I think that's a pretty hefty task. So certainly, I think it behooves both the U.S. and China to kind of come to the table and try to figure out a way to reduce the pain from at least the highest of these highest tariffs right now.
Okay, Jill Deesis, our Hong Kong News Desk editor, thank you.
Now, those talks with China came after Donald Trump announced his first post-tariffs trade deal with the UK. The agreement is a framework which gives the US increased market access to the UK, whilst British exporters will see limited relief on cars, on steel and on other export tariffs. Our UK politics reporter James Wilcock joins us now for more on this. Good to have you with us, James. So the announcement came with much fanfare. You had President Trump sitting in the Oval Office just surrounded by, his top team, and Keir Starmer dialing in. What are the details now that we have them, and what can we say in terms of how much good they'll do for the British economy?
I think we can objectively say it's better than if there were no deal at all. Now, you mentioned cars and steel. The tariffs on cars will go to 10% from 27.5 up to a quota of 100,000 cars, which is roughly what the UK exports anyway. And steel goes from 25% to 0. And then in exchange, the UK will offer US farmers improved market access, but also without altering its food standards. That's a key point. And also, it will remove its tariff on 1.4 billion litres of US ethanol that theoretically could be exported to the UK. On top of that, there is a $10 billion deal for Boeing with a UK plane maker. Now, we are reporting this morning that UK plane maker is AIG. And so that is another sort of key part of this. I mean, broadly, in terms of how we analyse this, I'm going to cite Bloomberg Economics and our chief UK economist, Dan Hanson. He was saying, pre the deal, that there was effectively going to be an increased tariff rate on all UK exports of just above 10 percentage points. Of that, 5.7 percentage points were the whole shebang, sort of reciprocal tariffs to 10% on all goods. 3.7% percentage points were in the auto sector and 0.8 percentage points were on metals. So we are seeing a major reduction in some of the most affected sectors here, and in that, it's better than it was. However, there are still going to be 10% tariffs on all UK goods, and they say that in that, there will still be a hit to UK GDP of 0.2% from this trade war, down from the 0.3% they had forecast, but their conclusion is it's a modest gain.
Yeah, and we'll watch to see how that IAG announcement plays out as well. What about the unresolved issues in this agreement? What are the key things to watch from here, James?
Well, I mean, you have to start by saying, Stephen, it's not a full-fat sort of free trade agreement. What it does is it takes the most affected sectors in both the UK economy, steel, cars, and the most affected sectors in the US economy, agriculture, and it ameliorates the kind of damage done from this global trade war to those. So it's both leaders trying to kind of make a better deal to improve their domestic kind of audience. And so as this goes on, we are going to see these negotiations on digital sectors, on various other kind of areas of both the UK economy and the US economy keep going. At the very least, it's going to be many, many, many months, if not years, before anything more solid comes out. But yet you've got to give Keir Starmer the sort of agreement that he's the first to get any kind of framework over the line here.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.